Hello everyone, this is Dr. Sagan, and today we are going to talk about the charts and charts which are related to stock market, which are related to your technical analysis. You know, this video is as much as important as other things. This for me is like understanding the 50% of analyzing any stock, or even if you are trading in commodity market, or even if you're trading in forex, in the stocks, in any field. This thing will help you in everything, in forex, commodity, and stocks. But particularly for my field, we will be only talking about stocks. And in this video, we'll talk about charts. Charts are the backbone of technical analysis because all the analysis that we do are applied on those charts. There are importantly three charts which we discuss now in here. Three types of charts that we have got: the bar chart, we have got the line chart, and we have got the candlestick charts. Out of these three charts, the only important chart is the candlestick charts, which was given by Japanese. So my suggestion is you should understand all the types of charts, get them in your blood going, because in the future videos, if you know the understanding of charts, I'll be just applying the simple indicators which are all computerized. You don't have to do any math, anything in that, because stocks, understanding stocks and analyzing market on the basis of technical analysis is not that much really hard, but people pay a lot of money to paid courses to learn this thing. But these videos, there are a lot of videos that are available on YouTube for free, but they're not available in a manner, in a proper manner. So what I'm going to do is I'm going to upload videos in a proper manner so you get to understand each and everything in a proper manner, because every trader, most of the traders are actually not college graduates that have learned from college, from their universities, about the stock market, about technical analysis. Most of them are like me. I was an investor, then I became a trader. I learned by myself. I'm a medical student, but I have nothing to do with math and all that. It means it's very easy to understand the technical analysis and applying them in your trading and reducing the risk by 80 to 70 to 80%. Like next time when you learn these analysis, when you learn technical analysis, you will reduce a risk by a lot. So let me give you an overview of what is technical analysis. Technical analysis is something like when we analyze, for example, when we analyze the stocks, we analyze them in two manners. In three manners, but in two manners. In actual sense, two manners. Or we go for fundamental analysis of stocks, or we go for the technical analysis. Fundamental is something we go through cash flow, balance sheet, actually going to the background of that company, reading a lot about it, and that takes a lot of time, and most people don't do that. The most of the commonly used analysis is technical analysis, because that is strong, and in the short term investment for a short term profits, that is the best thing, the technical analysis. In technical analysis, what happened? We go through the charts, we read charts, how the companies have been performing before, how will it perform in future. It's like the past will repeat itself in the future. And same thing happens in technical analysis. What we do, we see the charts, how the company performed before, and how is it it's likely to perform in future. So we can apply indicators, patterns, we can see the patterns, and we know how this company is going to perform. So that's a big talk. Now let's move towards understanding the charts. So what you have to do, you have to go to a website called investing.com. And in there, you are going to a search for any company that you are interested. For example, I'm going for the Pakistan State Oil. Alright, so this is PSO, Pakistan State Oil. And in here, we can see what was the today's change. So it increased by plus 6.3 rupees, and it was in percentage 4.23 percentage. So in order to go to charts and see the live chart, you have to hover over the charts and click on streaming charts. And as you come to the chart, just increase the size and make it full screen. and now we are in this chart. So first, I told you we are talking about three charts. We have got the candlestick charts, we have got the line chart, or we have the bar or OHLC chart. First, we're going to talk about, I'm going to give you a brief introduction about the bar chart and the line chart, but I'll be talking in bit detail about the candlestick chart. So this is your line chart. So line chart is actually made on closing prices. For example, today it was closed at 151. That was the price the market is closed at. For example, I'm going to this board. For example, this all right, let me put it in a proper manner. So for example, this is a chart, and I'm going to put some prices on the right side. This is 5 rupees, and this is 10 rupees, right? So what would happen, for example, if a stock is at this point, and again it closed at 3 point something, and again on the second day 5 point something, and again on the third day 5, on the third day it was near about 8 rupees. So what happened, we will drag a line. This is the price at which the market or that stock price closed. So we'll drag a line, and this line, the chart that is made due to this line, is called the line chart, and down there we have dates. So first we go back, we can see that on the right side we have prices, and below we have dates, and in this section we have volume. So first, this lecture, ignore the volume, let's look at the dates and the prices. So this is different prices, these are the closing prices. So what I mean to say is line charts are usually used for closing prices. We just write down the closing prices. And what are they used? They are mainly used for support and resistance, and we'll talk about support and resistance in the future videos. Now we'll move to another chart called the bars chart. So in bars chart, or we also call it OHLC. What does that mean? It's open, high, low, and close. What I would say, like, it's OHLC. H, which means O, open, H means high, L means low, C means closing. So what I mean by these terminologies, open means at what price the market opened, the stock price, at what price the stock has opened when the stock market opened in the morning. And high means at what level that stock price went, at what highest level. And low means at what lowest level the market price went. I'll show you an example in just a bit. And close means at what price that stock closed when the market closed. For example, these are the bar charts of, for example, this is the dates. It's 1 day chart, means every bar is showing 1 day fluctuation. So these are all 1 day. For example, if we talk about this day, and this is 2020, it's a 410. All right, so what can you see in this chart, this green chart? You can see at this, what this bar chart is telling us, that on the left side, if you see, this is a peaky on the horizontal line on the left side of a bar chart. And this is actually the open price. This is the open price, and that is the close price. So remember, on the left side we have the open price, on the right side the horizontal line is the close price. All right, so this is the open price, this is the close price. Again, for the red one, it is the open price, this is the close price. So what does this chart is telling us? We have two types of bar charts. This is the positive, this is the negative. So what does that mean? That something, when a stock is opened at low, which means, and this is the lowest line, is this one, this is the lowest line, this is called the low, L, and this is the H, means highest. So we have talked about OHLC, means open, high, and low, and close. You can see this one. And again, in the red one we have open, and it went high, low, and again close, down, not up. So that's why it's negative. You get it? It's very simple. Open, high, close, low, and close. just listen to this again and again, and you will understand what I mean by this. So these are all fluctuations of day timing, like what changes happen in any particular date. If you want to change it into an hour basis, it can be converted into an hour basis by just clicking 1 hour. So this is the 1 hour data, which means whenever the market opened, and it will show how much change occurred in 1 hour. And if you open it 1 month, you can see how much fluctuations happen in 1 month. For example, this is showing the month January, Feb, March, and this is April fluctuation. This is Feb. This is what we call January. So you can see in January the market was at 27, but at the end of the March it is at 44. So there's a big fluctuation, big price change in months. So you can see it in these charts. You can understand it in these charts. Now we'll move to a really important chart, that is your candlestick chart. We are in this. All right, so first let me convert it into day chart because that would be easy for me. So as I have told you, this line over here we have the price, down there we have got prices, we have got dates, and in here on the right side we have got the prices. So what I'm going to do is I'm going to first explain you what this candlestick chart means. Again, I'm going to open this page. All right, so I'm going to draw a line separating both of this. So what you have to understand, like first I'm going to draw a green candlestick. This is a candle. Like, let me tell me, does it look like candle? Yeah, it's a candle. So we have got this. So we have to understand different parts of the candle, but let me make two candles, like green and red. So what I mean by red, the market is down, and what I mean by green is market is positive. So what is happening now? So you have to understand first the terminologies. So this part of the candlestick is called, what we call it? We call it the body. So this is your body, the candle's body. This part is the wick. So this is the wick. So just name it. This is the body of the candle. This is the wick. Similarly with this one, this is the body of the candle. This is the wick. If we see it in a real example, you can see this, the big red, this is a body, this is a body, and above little lines, the small thin vertical lines, these are wick. So first let's move towards this one. And what does this tell us? So what happens, you have to understand that in green situation, the open price, the lowest part of the body, this one, the lowest part of the body is actually the open price. This is the open price, and the highest is the close price. This is the part of the body, and the wick is the peak of the wick is telling us that how high it went, how much high the price went, and the lowest point of the wick, the low wick, shows us how low this went. Again, in the red side, it's opposite of this one. So what happened, this is the open price in red, this is the close price because it's going down, and this is the highest it hit, it went up a bit, and this is the lowest one. So how much low it came and how much high it went. High, low is same for both, but the opening and closing is actually fluctuating, is reversing in both cases. So we'll take this both scenarios in real life example. So we are moving towards an example. Now check this out. For example, we're taking a one-day chart and we're going to this big thick chart. So this is called this is on 2023. It's March 13. On March 13, what happened? A company called PIOC, which is Pioneer Cement Limited Company, opened at what we call 39. It opened at 39, like the market price opened last date it closed at what? 41.45. But on the next day morning, it opened at 39, and the price went up. It hit the highest point of 43, and again came back. It might have gone to the low of 38, means on that day it went down as well, and again it closed at this price, which is called 42.92, means there's an approximate change of 2 rupees, exactly 2 rupees. It's a 42.92, it's 39.92, so there's an exchange of 2 rupees. And again, if we see the red day on the 3rd, on the 14th, on the 16th, actually, this was Friday and this is Monday. So what happened on Monday? The stock opened at 41, actually 42, and it might have gone to the highest of 42.98, and again it dropped and closed at this point, means it was its lowest point. There is no wick down, means it was its lowest, and it closed it to at the lowest of its price, and that is its 39.22. And you can see the trend is going downward. It's the situation due to coronavirus, due to lockdown. Due to that reason, the market, that company went down. Even the whole KSE 100 index went down. In this manner, if you pick up any company, even if you pick the Pakistan Stock Exchange, the KSE 100 index, for example, if I take the KSE, all right, it will take a lot of time. You can research on the KSE 100 index. It's the same way. So this is the candlestick charts. This is the basic review of making you understand how this chart look like, how these charts and what does these charts mean. But you have to understand this, because in future there are a lot of related things, and there's a detailed video I'll be making on the candlestick charts, because there is more to candlestick charts, because every candlestick chart means something. It's telling you something. When a candlestick chart is performing in a certain manner, when a candlestick chart or a candlestick bar is performing in a certain manner, it's telling you that there is something, what the future is going to be. So with the candlestick chart, with other indicators, you can apply and see how the market is going to perform. So for now, I hope you understood what are the types of charts and what does all types of chart mean. If you haven't understood anything or you have got any other question, please comment me below and do tell me, and please share this video to your friends and everybody who is interested in learning stocks, trading, whatever. And please make sure to visit Dr. Sagan again. See you soon.